Eric Mwathe with Mwathe.com with a weekend market analysis for the US markets for the weekend of August 13th and August 14th, 2016. Take a look at markets here with about half an hour to go. Markets pretty much unchanged or slightly to the downside in terms of the Dow and the SPX. NASDAQ, as you can see, is trying its best to hold the flat line into the end of Friday's session. Let's take a look at those charts. We begin with the NASDAQ weekly, and here, as long as the NASDAQ is holding above the recent 2015 weekly closing high, we have to assume that the bulls are fully in control. So here we see this past week the market moving above that level. The level to watch there is as long as the NASDAQ is holding above 5214, which is this close on a weekly closing basis for 2015. So as long as the market is above that level, really there's no reason to start looking for bearish situations. Now, if the market does begin the new week, or at some point if we see the market drift back below that level, then we can start looking for sell ideas or reasons to be short, because that might suggest a market that has run out of momentum and the fact that the breakout would be failing. So if the breakout fails, then there's a reason to be bearish. Right now, there's really no reason on this chart because the market is closing with a solid close above 2015's weekly closing high. We take a look at the Dow. There's two ways of looking at this. We can take a look at the 2015 weekly closing high. We remain above that, so that's solid and bullish. In fact, the market broke out and followed through. That's a nice looking chart, and the market did test that breakout. As you can see, we went back, tested that breakout, we held, and now we are attempting another fresh breakout. So for the Dow, the level to watch short term is this attempt to break out after 2 weeks of rest, which is the minimum rest period. So any breakout now is going to be legit, and it's going to be a fresh breakout with potential for fresh legs. And the level to watch here for the Dow is any movement that keeps the Dow above the recent weekly closing high of 18,570.85. Anything above that, and the bulls are solidly in control. Otherwise, as we see right now, failure to break out short term might be a problem for the market. So bulls would like to see the market stay above this level if the continued run is to take place. Otherwise, the more it fails, the more it's gonna start asking questions about the market, and the more we're gonna see market slowly rolling over. Also, we can see evidence of this if you take a look at the Dow daily. There's a little bit of a problem here in that we made a short-term improvement in highs, but the prices or the RSI did not follow through. Prices made a slight close to the upside, fresh daily closing high, all-time daily closing high, but this came at the expense of the daily RSI coming back and still showing negative divergence. This could be a problem short term, and the same can also be said in terms of the hourly for the Dow. On the hourly, similar type situation here, an improvement in prices, but the RSI continues to show resistance on this level here. Most recent moves higher have led to this negative divergence line being confirmed as resistance. That continues to be a problem. Also on the 30-minute chart for the Dow, we see that short term the market is running into a little bit of a problem here. As you can see, as we made higher highs, the market made lower highs in terms of the RSI on the 30-minute chart, which is not good. But what is really confusing here, if you take a look at the Dow, what you'll notice is that we have negative divergence line, and yet we have a support line that is forming. Also, we have this, what looks to me to be a wedge. On the top side, there's resistance on this line, and then there's a wedge here on the Dow hourly. This can also be seen on the 30-minute chart for the Dow. You can find a wedge on the RSI, top side resistance, bottom side support, suggesting that this market is, I guess, sideways for now, day to day, until it either breaks out of this range for another blast to the upside, or maybe now breaks down and we see some type of a strong push to the downside. So this wedge is going to play out one way or the other, which might really be explaining why the market is not dropping with any type of velocity, even as it tried to move lower on Friday. Let's continue watching the Dow Transports. As you can see, still this sector of the market continues to show some type of strong resistance, and as long as this line on the RSI showing resistance here, this might suggest that the next major swing in the market is lower, unless the market can move above that line of resistance. So without a movement above this topside resistance line, this chart by itself does indicate that we should more and more start looking for reasons why the market might point down by drifting lower. Keep in mind that this resistance line has been a problem for the Dow Transports going back many months. So as long as this line is resistance, this market continues to hit some type of a ceiling short term. If we take a look at the SPX on the daily, just like the Dow, we see here an improvement in price highs recently, but this has come at the expense of the RSI not moving higher. That's not a good setup. As long as this negative divergence continues to be respected by the market, the more we bump heads with this and cannot move above this level, the more this is a sign that the market's next swing trade is lower. Otherwise, market bulls would like the market to break out above that line of resistance. So right now we continue seeing resistance. We have to expect that this suggests a pullback. On the hourly chart, just like the Dow, what you see here is also evidence of a wedge, topside resistance on this line, and bottom side support. RSI showing topside resistance, bottom side support. So at some point we're going to get out of this wedge in price and RSI for the next major swing trade. Similar type action on the 30-minute chart for the SPX, just like for the Dow. We are trading in a wedge which eventually is either going to break out or break down. So the wedge continues. Either we eventually move above this line and blast higher, or we break below this wedge and move lower. RSI also showing topside resistance while showing bottom side support. So eventually at some point this is going to be the guidance. Anything above these lines of topside resistance might be bullish. In other words, breakout here in the price, or the RSI might be bullish at the same rate. Failure to break out and markets leading to a break on the RSI or on the price wedge might suggest that that is when the market truly starts seeing lower action. But for now, it's really hard to be outright bearish right now, because the charts do not suggest that the market is really giving any major sell signal. Of course, as we go day by day, week by week, the charts might change, but for now you're going to be hard pressed to find very strong sell signals. The key here is whether the S&P 500 continues being positive for the month. So as long as the market is positive for the month, the bulls are truly in charge. If and when the market turns red for the month and points down, that might be when we start looking for reasons to be bearish. Reason being that on the monthly chart right now, we are coming back to test a level on the monthly chart that could be a problem. So this break in 2015 brought the market off the highs here, and now we are coming back to test that break level here. So as long as the RSI is showing resistance here, and especially when the market turns red for the month, that's when we can start looking for monthly charts giving us a sell signal. Now keep in mind there's a reason for this, being that if the market turns red for the month, that would suggest that we had a monthly improvement in price closing highs, but the RSI would confirm negative divergence. So the key here is whether the market is positive for the month or not. Otherwise, once the market, and if the market, and when the market confirms resistance, this might not be a good place to show resistance. The reason is this is where the market has been giving us major sell signals over the last couple of years. Every time we hit this level and show resistance, like here, pull below that red line, the market dropped. We broke down here in 2008, early 2008, late 2007, and here those resistance again for the highs here. And during the phase when the market was bullish, as you can see, the market stayed above the red line during this period here. So this is a key spot on the monthly charts, above that red line, and the markets are bullish, right? And yet resistance on this red line might suggest that now the major direction for a swing trade month to month, week to week is low. So right now the market is positive for the month. Let's give the bulls that benefit of the doubt. Eric Mwadeth, Mwadeth.com. Remember, subscribers, I'll have the part 2 of this video sometime on Sunday, and should have some buy ideas as we've been doing over the last couple of weeks. Otherwise, enjoy the rest of your weekend. Peace and blessings. Peace and blessings. E-A-C-S. And so it is. Yeah. Yeah, baby. Woo!